Before we begin, just a quick note. This podcast is produced by qualified financial professionals and is intended to share general information and insights to help expats better understand common financial topics. However, everyone's circumstances are different and regulations can vary by country, so nothing discussed should be taken as personal financial, tax, or investment advice. If you're considering making financial decisions based on anything covered in this episode, we recommend seeking professional advice tailored to your individual situation.
Hi, I'm Georgina, and you're listening to Expert Money Matters. At Chase Buchanan, we know your time is valuable, so we've taken our signature weekly market update email and turned it into this easy-to-digest audio briefing, so you can stay informed while you're on the move. Here is your weekly market update for the 8th of July, 2026.
Good morning or good afternoon, depending on where you are in the world, as summer temperatures peak across England and the continent, causing more than a few logistical headaches and infrastructure groans. There has been plenty of noise to keep us distracted. Between the global fever of the 2026 World Cup dominating our screens and the skies across the Atlantic lighting up for the 4th of July celebrations, the world feels incredibly busy right now. And with all these summer distractions, it is remarkably easy to miss the structural shifts quietly reshaping the cross-border financial landscape. While some of the geopolitical noise has softened, the legislative and regulatory reality has accelerated. So here is how the landscape has evolved since our last update and what it may mean for your wealth. Let's begin in the UK, where the political transition we have been monitoring is moving at a rapid pace. Andy Burnham is widely expected to become Prime Minister through an uncontested transition to Labour leader, with the handover expected in mid to late July 2026. His incoming governance blueprint, widely termed Manchesterism, advocates unprecedented regional devolution and greater state intervention, because the incoming administration has explicitly committed to strict fiscal borrowing limits. It may be structurally forced to seek alternative revenue streams to fund these expansive regional programs. For expatriates and investors, that anticipated fiscal trajectory presents immediate structural considerations. One area to watch is capital gains tax. Prominent Labour figures have been actively advocating for the alignment of capital gains tax rates with standard income tax brackets. If such a proposal were introduced, it could significantly increase the tax burden on asset disposals, potentially bringing the top rate to 45%. Another area is property taxation. To fund local devolution, Burnham has consistently championed replacing council tax and stamp duty with a proportional land value tax. Some proposed models would introduce an annual levy based on current market valuations, with a higher charge specifically targeting second homes, overseas buyers and empty properties. The difficulty for many people is timing. The uncertainty surrounding the exact implementation dates of these policies has triggered a wait-and-see paralysis in the broader market. Many advisors are discussing whether certain transactions should be accelerated before any future fiscal changes are introduced. Whether this is appropriate depends entirely on individual circumstances. From there, we move to the geopolitical picture. The 60-day ceasefire memorandum between the United States and Iran has temporarily improved commercial navigation through the Strait of Hormuz. This has provided a significant disinflationary tailwind for European economies, with Brent crude recently trading in the low 70s. Major institutions are now looking at a lower oil price path if trade flows through the strait continue to normalize. However, this macroeconomic relief remains entirely contingent on a fragile maritime standoff. Iran is actively seeking to introduce a mandatory maritime service fee for vessels transiting the Strait of Hormuz, modelled on Turkey's Turkish Straits charging system. While no final tariff has yet been agreed or announced, any such regime could materially increase freight costs, insurance premiums, and global transportation inflation. In practical terms, this could act as a direct imported tax on international supply chains and consumer prices. We are also seeing continued tightening for US connected persons. We have previously warned of the tightening regulatory net for US-connected persons. We are now witnessing industry-wide tightening across the UK retail investment sector. With the interactive investor deadline in January 2026 and Standard Life's transfer-out mandate at the end of May 2026 now behind us, platforms are actively executing account restrictions and forced liquidations for clients who failed to restructure their assets. The regulatory reality is clear. Major platforms are entirely rejecting new business from US residents, driven by the suffocating compliance costs of FATCA and strict enforcement of US SEC broker-dealer regulations. Forced liquidations can trigger significant potential PFIC tax consequences. To mitigate this wealth destruction, specialist cross-border advice is often required to assess whether structures such as international SIPPs or other solutions may be appropriate by financial advisors holding dual authorization, meaning they are regulated by both the UK's FCA and the US SEC. Across Europe, the direction of travel is also becoming clearer. The 1st of July 2026 marked a watershed moment for European fiscal policy, officially ending the era of broad, unrestricted tax arbitrage. In Cyprus, rent for immovable property must now be paid using recognised electronic payment methods, including bank transfers, payment cards or other approved digital channels. The reform is designed to improve tax transparency and reduce undeclared rental income. Landlords are no longer permitted to accept rent in cash, and non-compliance may result in tax and regulatory consequences. Portugal is also entering a new phase. The new tax incentive for scientific research and innovation, known as IFICI, is now fully active, replacing the legacy NHR scheme. IFICI explicitly removes the preferential 10% flat tax on foreign pension income, meaning new retirees will face standard progressive Portuguese income tax rates of up to 48%, unless they qualify under highly specific scientific or technological professions. For expatriates currently operating within their 10-year legacy NHR window, the focus must now shift to proactive exit planning. Once the status expires, residents are pushed into Portugal's standard progressive tax rates. Proper structural planning, such as reviewing trust treatments and optimizing dividend flows before the 11th year, remains highly effective. The transition can be managed smoothly, provided asset restructuring is initiated well before year 9. And finally, in France, the political left has proposed a new luxury tax targeting mobile assets. An amendment connected to the Finance Act 2026 sought to dramatically increase the standard VAT rate to 33%, specifically for sailing yachts and motorboats. While this has not been adopted as binding law and would face significant legal and EU-level hurdles, it does signal an increasingly aggressive legislative environment for luxury physical assets. So what does this all mean? The global financial landscape has evolved from blunt state incentives to increasingly targeted tax enforcement. Capital must now be structured with absolute jurisdictional precision, pivoting away from vulnerable physical assets towards insulated, compliant cross-border wrappers. If you believe any of these developments may affect your circumstances, we encourage you to speak with your Chase Buchanan advisor. A complimentary review can help assess whether any changes to your financial planning should be considered.
And that wraps up this week's Market Snapshot. If you'd prefer to get the information before it's published here, you can sign up for the update directly on our website. Just visit chasebuchanan.com and subscribe and get the update delivered straight to your inbox, giving you a head start on the week. Thanks for listening to Expert Money Matters. I'm Georgina. Join us next time as we explore money matters for your life abroad.